Well, in a weak market, the one sector that has shown some sort of growth is the jewellery space. We've seen that in the numbers of PNG Jewellers. We've seen that in the number of Titan as well, especially on the top line front, notwithstanding the margin compression that we've seen. And that's a trend that follows for PNG Gadgil as well. The revenue growth was up by almost 46%, but the margins were slightly under pressure. Saurabh Gadgil, who's the managing director, joins us now. Saurabh, thank you for joining in. The quarter from a revenue standpoint was fairly strong, understandable because of the cuts that we saw in the customs duty. But that also led to an inventory loss for a lot of the jewelers. If you could quantify that, how much of that was, factored in the second quarter? And secondly, how did your studded share perform in the second quarter? Where does that number stand at? Those two numbers.
Good morning. So, like all other players, with that duty cut in the month of July, we also saw some loss in the valuation of the stocks. And for us in the Q2, the number is around 18 crores. So the PAT, which is around 36 crores, post this 18 crores hit up, should have been plus 50 crores if we would have been able to not face the duty brunt. But having said that, the sales have been strong. The quarter has been good, and as far as the ratio of studded is concerned, studded has been doing well. There's been no pressure on natural diamonds. The sales have been growing, and we are at 10-11% of the entire sale which we can contribute to diamond and studded jewelry.
The same last year as well, right? So in light of growth that you've seen across your parameters, studded hasn't grown any faster. Is that what one has to read?
Studded has been steady. So studded has grown in terms of value. When we look at the entire in percentage-wise, it has been at 11%, and which we are projected that we eventually want to scale up to 15%, and this could be in the next 2-3 years. So the aim is towards that, but we have been showing steady growth in studded also.
Hi, Saurabh. Good morning and good to see you in. What about growth for the year? How is it likely to look? And how is quarter three shaping up? We're getting into that peak wedding season, a lot of numbers in terms of the number of weddings that we're going to see, as well as the festive season. So how is the start to the quarter three been and the target growth for the year?
So the quarter three has started well. We added 9 stores post our IPO. So in the month of Navratri, we did 9 days, 9 stores, which have all been operational just before the festive season. Has been a big boost to us. Diwali Dussehra, the entire season has seen strong value growth, upward of 25% value, and the trend continues. Currently, with the prices taking a substantial dip and falling below 75,000, I think it's given a big boost to the market again. There are around 40 lakh weddings as per the CIT report in the next 3 months, which should again give a big boost to jewelry consumption. So all in all, we're looking at a good Q3. And when it comes to the entire year, we feel that in terms of value, we should be looking at a 40% growth year over year.
All right, 40% growth year over year, would be your estimate for the entire year in terms of value growth. What happens to margins? Because this quarter, obviously, margins were lower, impacted by that 18 crore inventory hit that you speak about. But as you move along with, hedged gold reducing as a proportion of your overall numbers as well, what are the margins one should realistically look at by the end of this year?
Yeah, I think we are strong on hedging. Like we are committed post our IPO, we'll be looking at using gold metal loans to increase the hedging portfolio, which has steadily started increasing. If you see, as of September end, we have repaid a lot of bank loans. And as we had spoken, we want to convert them to non-fund-based limits. And that is happening. So we feel by the end of third quarter, we should be around 55-60% hedged. And that would also give a big boost to margins because gold metal loans come at lower interest rate as compared to working capital loans. So I think the guidance for margins would remain the same as we had said in the last presentation, that we should be looking at margins of around 3.5-4% PAT margins. When you look at the sale, which we count as retail sales, and I think overall we should be at a margin of around 3% overall on the entire turnover, the PAT margins.
Okay, all right, Saurabh, thanks a lot for joining in. And heartening to hear that you're saying that natural diamond sales haven't really been impacted, and you're saying the quarter three has started off on a fairly good note. Thanks a lot for joining in.